Hello traders, Gary Wagner here, just after 11 o'clock in Honolulu, 5 o'clock in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 5th day of December 2014, and this is the daily report for gold and silver, our weekend review. And what a week we've seen in this market. To close the week, we are going to close on a down note. Across the board, precious metals trading lower in light of a favorable jobs report, record highs in both the Dow Jones Industrial Average and the Standard & Poor's 500. Dollar also very strong. We'll touch on that in a moment. First to gold, currently trading at $11.91 and change. That's off of a low of $11.8650 and a high of $12.10. Silver also trading lower on the day, off over 1%. Gold off over 1%, down about 17 cents. Current print, call it 1629, 1630 in that area, 1615 on the low, 1666 on the high. More on silver in a little bit. And also, I do want to let all of our subscribers know at the end of the show, we will have information that will allow you to enroll in our loyalty program. That will allow you to get the daily report for about $83 per month. It is only offered until January 1st and will not be offered again until next year, same time. Wow, what a week we have seen within the market. Tremendous volatility as the volume lightens up as we get closer to Christmas, New Year's vacation. Of course, we're right in between holidays here in the United States. We can see that the market really sold off about $14 on the day. We had the best jobs report out, I believe, in about 3 years. We have oil moving much lower, record highs in the Dow Jones Industrial Average and in the Standard & Poor's 500. Dollar also very strong. We'll look at all three charts during today's weekend review. First, I want to take a look. This is our short-term gold chart, roughly 230 minutes on this chart. We talked about the fact that we really pegged our current resistance at roughly, call it 1208 and 1207. That's at 38% resistance level off of the most recent move from, call it 1254 down to this low right in here at 1131. Now, no doubt, we did pop above it, and we popped above it considerably throughout the week. And really what we were looking at that point was not only the 38% retracement level, but when you look at the 23% retracement level, and that comes in, let's get a much straighter line here, but that comes in right at around 1221. I'm just going to put it above this mark here, but about 1221. And there's no doubt we went for that high at one point, but all these subsequent highs you can see are diminishing as it moves back below this area. Once we came below this area, this solidly became resistance once again. And in terms of short-term support, we talked about this throughout the weekend, especially yesterday. We have a couple of levels. The primary level right here is this 1186. Now, the 1186 is slightly different. We also have an 1177. These being really the two areas that we want to concern ourselves. The 1186 is a 38% retracement. The difference on this retracement is where we're putting the high. So on the first retracement we put the high at 1254. On the second retracement we put the high off of this area right here at 1221. And that's how you come up with this 38%. I believe that this also, our 1177, of course, in terms of our different support levels, these are them right now from 1186 down to about 77. Now, this to me really indicates a return to the basic fundamentals and the correlation between them, meaning if we're having a strong equities market and if we have a strong dollar, that has got to put some substantial pressure on the precious metals market vis-a-vis specifically gold. And the reason for that, well, one, the dollar, if it is paired with gold, is going to have that effect. And we'll take a look at the Kitco Gold Index. And what that basically tells us is this, call it a $15 lower pricing in gold. almost $10, $9.50 of that is due to a strengthening U.S. dollar, and only $5.50 due to direct selling. So there's no doubt we had selling come into the market, but when you add that to a strong dollar, that's when we get these dramatic price sell-offs. So first and foremost, we talked about the utter strength of the U.S. dollar. You can see that here on our daily chart. New high up and closing above 89, 89.37. This being on a daily chart. If we go back to our weekly chart, we can get a little bit better idea in terms of when we have seen this last. And to do this, we are going to really need to compress this. There we go. And if we compress this, we take a look back in 2011. This is 2010. And at that point, that was the last time we were even really close to this area. Let's just draw a line across it. And you can see we've absolutely taken out that high as of today's trading. Now, we'll have to let this weekly chart update because we know we're at 89.30, but there we go, 89.36. But I wanted to really compress this chart a little bit more so we could get an absolute idea of when we've seen this market hit this top or close to it. The record top that we have, of course, back in 2006, we exceeded that in the dollar index. And of course, we did that again in about middle of 2004 right here. But other than those two occasions, and that's quite some time ago, you can see that it's been this triple top right here that we were flirting with. And we are just right about at this point. So we haven't really seen these kinds of pricing since, call it 2010 or 2009. These are certainly not record tops if we go back historically, because we can see the dollar much higher, but we have not seen the dollar rage like this in quite some time. And if we take a look at the beginning of 2014, which begins right over here, at that point we pretty much had a very flat market, and then in July we almost have a parabolic rise, very similar to some of these other rises we've seen historically. Again, Dow Jones Industrial quickly, what, about 50 points from that elusive 18,000 mark. Here we're looking at the Standard & Poor's. This is the mini. It is a weekly chart. You can absolutely see the plunge that we had during the 2008 crisis, the financial crisis, and then the market bottoms roughly beginning of 2009. 2009, the Standard & Poor's was trading at 700, and then you can see from 2009 up to about mid 2011, we see a dramatic rise to about 1,300. We get this strong correction in the market, but since then it's been pretty much up and away. We are in new record territory, of course, with the Standard & Poor's 500. What does that signal for the precious metals and specifically gold? So first I want to take a look at this 3-day chart. When we look at the 3-day chart, the one thing that we can see is we have not broken back below these dramatic lows. And of course, this is an area, I believe, roughly at about 1180. These were the prior lows that we had before going and testing this new low at 1131. So we're just slightly above that. My sense is that if we dip back and break below this former triple bottom, because we have a lower low right in here, it's pretty much signaling that we're still absolutely caught up in this fifth wave down. If that's the case, we have really forecast in terms of a price point and where that could go to about 1080 in terms of gold prices itself. The real question is have we seen the low at 1131? My sense is that we probably haven't. My other sense is that as we are in between these holidays and as we get closer and closer to New Year's and Christmas, we should see volume actually lighten. When we have a reduction in volume, of course, we have an increase in sensitivity, another way of saying volatility. We've certainly seen that. We have been flat throughout the week, And I believe that we have been doing that with good cause because we have been caught within this range on the high 1221, on the low as of recent 1241. Short-term perspective is still the market has been moving up because we watched it move off of this low of 1131. It came back up. It stalled at about 1208, then moved back down to a higher low at 1141 off of the 31, and from there it really stalled at 1221 as the high. We're going to remain flat over the weekend. I want to see what kind of reaction or follow through we get both in the equities market and the dollar come Monday. If we see that continue to have the strength that it's had, then my sense is with or without the volatility in the market, we should see some consistent pressure to the downside in gold and probably silver. And the key is this: what we have been witnessing throughout the week is a really whipsaw action in the market when you consider what happened as the market opened up Sunday on the mainland and Hawaii. Of course, this is following the 4-day weekend, the Thanksgiving weekend, in which we saw it close down $35, $40 overseas, only to go up $40 in the New York market. We realize that there's that tremendous volatility. We want to have a clear-cut sense of direction and a clear-cut sense of elongated trend rather than this very, very quick flipping where we see it up substantially one day only to be followed by down substantially the next day. And then lastly, a little bit about silver. First, this is our weekly chart, so you can see this is that dynamic move that we saw when silver actually on Monday touched at 14. So we've had a low of 14. We've had a high of what, about 1660. Market currently trading 1627. We are absolutely closing up on the week. However, when we look at our daily chart, let's quickly convert that. You can see that that dramatic move really happened on Monday. This being the remainder of the week here, this is our subtle day down, but look at the relatively small body size in the market. Now, we have seen that in silver where it will run into an area in which it's either building a base, and from that base is going to continue in its current direction. However, if we look at that in context of what we've seen recently, the current direction absolutely, even with this big rise, has been dramatically lower. Now, when we move this back to our weekly chart, just to get a feel or a sense and go ahead and compress that, how that fits into the big picture, we really draw our attention to some of these record lows. And that's what I find interesting. This is back in 2010, and that's really the last time we touched these lows at around 14. So significantly, an area in which, in terms of a historical perspective over the last, call it 4 years, we've only seen silver trade at this low ever so briefly this week, but it's only the second time we've seen it since 2010. We absolutely want to keep that in mind. Traders who are interested in the loyalty program, I will give you information right now as to how you can go ahead and enroll. Realize that this is only available until the first of the year. More importantly, this will not be offered until next year, this time for new members that have joined us, existing members that didn't take advantage of it. So if this is something you want to consider, you really want to consider doing this year rather than next year. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you next week for another daily update and review. And here's the information I promised about enrolling in the loyalty program. First off, I want to thank all of our subscribers for the loyalty that you have shown us over this last year. Starting last year, I started a program called the Loyalty Program. Now, the Loyalty Program, I am going to repeat it, is only available for 1 month from now until January 1st, and it will allow you to get our best pricing ever at a maximum of about $83 a month. Now, all of you who are viewing this video are actually eligible for this particular service. And the way that you would enroll, you know, from the top, you've got these options. Go ahead and press My Account. And then once you're at your account, press Add Renew Subscriptions. And as long as you're an active member, and by viewing this video you are, you're going to get a couple of new choices. The first choice allows you an annual membership, $999 per year. It comes out to about $83 per month. It is billed annually. You would click that, and we have added a new one for those existing loyalty members, or for those who choose to. You can now get a lifetime membership, $2,999, $29.99, and this will allow you to have an account really that never expires. Now, with the Loyalty Member Gold, of course, you're grandfathered in. Your fee will never change. It will never go up. And to enroll in this, simply click on the option that you choose. And then once you do that, click Next. When you click Next, you'll get a screen similar to this, which will allow you, without a PayPal account, to simply use your credit card and go in and enroll for the loyalty program. We will be sending out a special notification, but prior to doing that, I wanted those who watch our daily video the opportunity to get this first. Again, this option will only be available till January 1st. For those of you who have been with me for a while and are looking to stay, this is really the best, most cost-effective way to get the Gold Forecast every day. As I said, at minimum, it runs $83 per month. And of course, the lifetime, it's going to be much less as the years go on. Again, thank you for your support.